Have you ever bought a stock because everyone was talking about it? Maybe a friend told you it was big time thing. Maybe social media convinced you it could double your money. The truth is, some stocks can make you rich, but some can quietly destroy your portfolio. Today, I'm sharing three types of stocks I would never buy in 2026 and why avoiding them could save you a lot of money. Let's get right into it. Hi, welcome to my channel. Welcome to Finance with Monisade. And on this channel, we talk about everything finance, everything investment, and everything stock market. And if you have not subscribed to my channel, please subscribe to my channel because we have a lot to learn on this channel. Now, let's go right straight to it. On this video today, I'm going to be talking about three kinds of stocks I will not be buying in 2026. And I'm not going to, the reason why I'm not buying them is because there are lots of issues related to all these stocks or for various reasons, which I'll be discussing below. So the first stock I won't be buying are companies that generate excitement but not earnings. You know the type. The stock is trending everywhere. Everybody is talking about it. The share price is soaring. But when you look under the hood, the company isn't making meaningful profit. Investors are buying hope rather than results. Now, hope is an investment strategy. As investors, we want businesses that create real value and generate cash. If a company's story sounds better than its financial statement, I'm staying away honestly because that sounds like scam to me. Because eventually fundamentals matters. And when reality catches up, hype stock crashes the hardest. Now, the second type of stocks I won't be buying are companies drowning in debt. You know those companies that are drowning in debt. But for some reasons best known to you, you feel, oh, I maybe I should invest in them. Maybe you are hoping maybe things will get better. But the truth of the matter is that once a company is indulging in excessive borrowing and high interest expenses, there's very much possibility that this company would have reduced profitability. And the main reason why you are in the market as an investor is to make profit. So if this company is not making you profit, I think it's time to take the high road and move away. Now, high risk during downturns. You see a lot of companies, by the time these companies come into the stock market, you see they promise investors a lot of returns. Such companies have what we call high volatility. No, this means that your money is not safe. So, as an investor, you must understand why it is important to understand depth and risk. Do you understand? For instance, now, weak balance sheet creates risk. Now, a company that is not turning over profit is actually going to be living in debt because it actually takes profit to run an organization or to run a company day to day. So it limits flexibility. A business that is already in debt will find it very difficult to innovate or to expand. So you're looking at situations where this company is already neck deep in debt, and then you as an investor, you're actually hoping that, oh, things will get better. Now I'm here to bust your bubble. Such companies don't eventually get better. So it's best for you to cut your losses. If you're already investing in such companies, it's best to cut your losses and move ahead immediately. Now, great businesses can become poor investments. When a company does not know how to manage its debt resources, when a company is always neck deep in debt, when a company is making more losses than profits, that company is not going to be a good it's not going to be a good stock or good company to invest in as an investor. So you have to be very careful. And that is why I always tell investors that it's not about to indulge or to listen to hype or what is happening. It's you going to study the financial statement of these markets, of these companies. You need to look at the financial statements to see what the balance sheet looks like every year. That would actually help you to make a very cogent decision. Now, three type of stock, the third type of stock I won't be investing in, business that I don't understand. Now, I beg you as an investor, it is not all companies that you invest in, especially a company that you don't have an inkling or an understanding of what they do. Like Warren Buffett will always say, he will always say that I do not invest in a market I don't understand. Now, there are some businesses that have complex business models. It is difficult for somebody who does not have an in-depth knowledge of finance to actually decode or understand what they do. Or it's difficult for you as an investor who does not have a background in finance to be able to actually understand what the business is or what their kind of models. Do you understand? Or you cannot understand the structure, the management structure of those companies. So it's difficult for you to actually understand why are you investing in such a business. Now, another reason why I won't be investing in such a company is difficult to assess risk. Now, when you don't understand the business, how do you want to understand the risk that this business goes or this business does? An inability for you to assess risk is putting your money in jeopardy. Now, it's hard to evaluate management decisions. Management just wakes up one morning and start making decisions, starts starts with retiring board of directors with no reason at all. Such a business is not a business you should invest in. So you have to be very careful. You have to stay ahead. You have to invest in only markets that you understand. So if you're finding it difficult to actually understand what that company does, that is a red flag already. So you stay away from them. Now, invest within your circle of competence. Understand how the company makes money. Like I usually say, as a beginner investor or as an investor who does not have an in-depth knowledge in finance, stay within companies that actually solve human needs. So this would actually help you to understand how that company is making money. So if you have a company that is into manufacturing or is into agriculture, you already understand that, oh, agriculture is one of the basic needs of humans. Everybody needs to eat at the end of the day. So because of that, you already have a competence, like an understanding of what this company does to make money. But going ahead to invest in a company that you don't understand the services that they provide or the services that they provide to the public is going to be very difficult for you. And you might not even be able to understand the ROI on such companies. Focus on businesses you can explain simply. Now, if a company, if you're finding it difficult to understand what this company does, that is another red flag for you. If you cannot understand what this company does without you maybe consulting a lot of people and you cannot explain what this company does, that is one very good reason to actually stay away from such a stock. Now, there are always other opportunities. As an investor, let's forget about the hype. Let's forget about everything people are saying. Like I always say, or I've said in my previous videos, there are 1,001 companies that you can invest in. All you need is understanding and knowledge of what this company does. Many of the times, investors don't want to do research. So because they don't want to do research or they don't have the time to do research, they end up investing in companies that are not going to make them a lot of money, or they end up investing in companies just because of social bubble, because of everything people are saying online. So that is not a good reason to invest, and that is not a good company to invest in. So as a key takeaway for this video, one, avoid stocks with no profit. Companies with excessive debt, please avoid them. You cannot be hopeful that their luck is going to change. You understand? You cannot build your financial independence on hope. Money has no emotions. So when you see the track record that this company has not been able to, this company does not make money, doesn't make profits, that is another reason for you to run away. Businesses you don't understand, stay clear away from them. You need to understand what you are going into before you start investing. Now, protecting your capital is just as important as growing it. It's not just for you to put your money into the market. You must be very careful and you must protect your money as much as possible by staying abreast of information, one. Now, by making sure that you as an investor, you also have a goal for investing. Don't just go into the stock market because you see people doing it. That's not the reason why you should actually invest in stocks. You should invest in stocks because you have a goal, a personal goal. So, guys, I hope I've been able to teach or I've been able to tell you. I hope you've learned one or two from this video. And if you found this video really helpful, I want you to click on the subscribe button below. Thank you for watching this video. I'll be looking out for you in my next video.